Wow, layoffs from Tesla again and a hiring freeze. Musk's warning for the Federal Reserve and the economy, and Twitter profitability updates and more. All of this since last night. Oh my goodness, what's the day gonna hold? It's 5 a.m. Anyway, hey everyone, meet Kevin here. Let's get right into this right after I mention that the only sponsor helping support these videos and make sure they keep coming to you all day long are the courses down below on building your wealth. So check those out. Incredible holiday coupon code for real estate investing, rental renovations, a long-term wealth with stocks and psychology of money, being a real estate agent, or making YouTube videos. We've got a course on that too. Take a look, link down below. So Electric broke this morning that apparently Tesla has told some employees that Tesla, or Elon Musk maybe has told some employees, that there are plans to implement another hiring freeze, and confirmed that there could potentially also be another wave of layoffs coming. Now, I thought this was really interesting when I first read it because my first thought was, uh-oh, here we go with the demand story again. But the phrase here, at least, was another round of layoffs. And so that got me thinking back to the last round of layoffs that we had in June. That's when Tesla decided to pause all hiring, and Tesla was cutting 10% of its staff, which was met with a lot of mainstream media, essentially clickbait, over the idea that Tesla was all of a sudden cutting from its manufacturing staff. When the reality was they were just cutting people wearing white colors. In other words, people in the G&A departments, right? General administration. There isn't much of a sales department. I mean, with the exception, obviously, of the Tesla dealerships or showrooms, if you will. We don't like to call them dealerships since the dealership model has been axed. Anyway, and so back in June, Tesla was still actually actively hiring for its manufacturing plants, but they were laying off and freezing hiring for corporate positions. And they cut about 10% of their staff there. Now, they've got about 100,000 employees, and the bulk of those are in manufacturing. Somewhere 80 to 90,000 are in manufacturing. In June, Elon Musk started these layoffs with a, quote, super bad feeling about the economy, as at least he told the world via an email to Reuters. So he also believed that we would be in a recession for about 18 months and that ultimately some bankruptcies needed to happen. Well, so far, he hasn't been wrong in that the economy has definitely weakened in the last 6 months. And it was at least then realized, hey, you know what? Layoffs and a hiring freeze at Tesla in June was ultimately considered a good thing for Tesla, something that could help Tesla preserve margins in a time of more leanness. Now, do keep in mind that those layoffs in June were right after the Shanghai shutdown in May. So even though those layoffs occurred in June, which is the end of Q2, still ended up having a rough quarter two because of the Shanghai shutdowns. Now, we don't have Shanghai shutdowns. We basically have an all China shutdown. That's because even though technically COVID zero has been unofficially lifted, it seems like many Chinese, at least from what we're hearing, are either sick or are staying home for fear of being sick. And subway ridership is down at essentially the same lows in most cities, or many cities, I should say, across China, just like what we saw in May. So it's almost like you kind of have this de facto people shutdown in China. And in May, you had an actual shutdown in China, certainly in Shanghai, where Tesla Shanghai is. And that led to the last round of layoffs. So part of me wonders if this goes back to the China story. Part of me also wonders, is this just going to be white collar again, or are there going to be any manufacturing layoffs? I personally can't imagine any manufacturing layoffs, given that Tesla is at least still set to announce, although they haven't yet officially, they're still set to announce Tesla Mexico, in which they would invest $800 to $1 billion in a gigafactory in Northeast Mexico, and potentially invest as much as $10 billion over the next 5 to 10 years at Tesla Mexico, which would be the largest gigafactory investment that we've seen yet, unless, of course, they're counting payrolls, in which case then you may as well just call it Fremont, but we'll see. So the other thing to consider is we're still ramping. We're still substantially in the ramping phase for Tesla Berlin and Tesla Austin. So it seems unlikely that the manufacturing sector is one that's looking at cutting. But I will tell you this. when companies expand, it's very, very common to expand kind of like an onion. Like you've got a good core, and then you get kind of like these layers and layers and layers that get expanded on. But sometimes you look and you go, man, we just hired too much. That last layer, 10% of the hires weren't good. And you go in, you kind of remove, refine, and then keep going. So that way you don't get kind of like a moldy onion. You want to keep the onion fresh and juicy, and you want to pare back pretty regularly as the business is expanding. And that actually comes with any business, no matter what size it is. And it's something called growing pains. As you hire people, you're unfortunately going to have to fire some. So this hiring freeze was just again announced by Electric this morning. And another wave of layoffs coming in Q1, I find very interesting for timing as well, because Q1 doesn't necessarily imply this is like, hey, China's slow in December, let's just lay some people off in China. In my opinion, Q1 and this sort of warning is more of a way of giving people a heads up who have white collar jobs. Hey, you know what? Maybe we don't need 10 CPAs working on this job. We really only need 8 for. That's my expectation of roughly what to expect. Keep in mind that Elon, he's known to fire people. Just look at Twitter, which we'll have some updates on Twitter on in just a moment as well. But I want to stick for a moment to something that Elon Musk just mentioned on Twitter. Take a look at this. So somebody here wrote, what's comforting is that Elon won't even entertain the idea that his behavior impacts the stock price. Now, I don't really think that's comforting. I think that's being a little bit blind to reality, but that's okay. We'll talk more about that in a moment. So Elon replies here, maybe so, which actually is the first sign I've seen of him like finally relaxing this idea a little bit, that he's kind of blind to his politics affecting Twitter. I will say Dave Lee actually had a wonderful thread this morning talking about how Elon Musk should really be the neutral umpire. I thought he had a great analogy on Twitter. I encourage you to check it out. But anyway, and I agree with that. I think Elon Musk, if he is trying to promote free speech, should be a neutral umpire. But then again, everybody's got their opinion on this. I'm going to give you my opinion. We can disagree. We could still have beer together. All right. Anyway, so Elon Musk replies and says, maybe so, in which case buying opportunity for Tesla, he's implying, right? Again, this is all in reference to Tesla. However, he does say the following. I keep saying that Fed rate is insane, because data I'm seeing says we're already in deflation. Now, this is really interesting because Elon Musk, again, employs over 100,000 people with massive, massive producer price side insights, right? Before we get producer price index numbers, Elon Musk knows what's going on with costs for materials, components, shipping, all of that. Kind of like, what was the, no, I was going to make a bad joke. I'm going to skip it. Anyway, if true, then the real return for T-bills is roughly that of the S&P 500. Now, that's actually fascinating because the real return for, or the nominal return for Treasury bills right now sits at probably about 3.8% if you had a laddered portfolio now. If you started one now, it's fallen a little bit. But if you went with, a 1 to 5 year laddered, you'd probably be sitting at 3.7, 3.8, somewhere around there, maybe knocking on the door of 4, but somewhere around here. Let's just go with 4 to make math easy. If S&P T-bills right now, T-bills, usually the shorter term ones, are sitting at 4%, then, and Elon Musk expects inflation deflation of maybe negative 3%, then the real return of T-bills is actually closer to 7%. And usually we like to say that the long run return of the S&P 500, not considering dividends reinvested, is somewhere around 7 to 8% reinvested annualized. 7 to 8% annual long-term rate of return for the S&P 500 historically over the last 40 years. Let me get that right. If you reinvest dividends, it's somewhere around 9.4%. But that's interesting because he's really suggesting that we could be seeing somewhere around 3% deflation, maybe even 4% deflation right now. And it's something that he thinks the Federal Reserve is blind to. Now, yesterday, I made a video and I talked about how the Federal Reserve, and I encourage you to watch it, but I'll give you a quick preview. I talked about how the Federal Reserve is already waking up to the fact that they're making big mistakes. They released the Chicago working paper where they talked about, we are totally failing to realize that rents are already plummeting. The Philadelphia Fed is making the Federal Reserve finally wake up and realize that they're overcounting the number of jobs that have actually been created because they're paying too much attention to the establishment survey, which makes politicians look good and doesn't reflect reality. So is it possible that Elon Musk is right that we are experiencing deflation already? Well, to understand this, I wanted to look a little bit at some of the things that he might be exposed to. And here's what I found. When you look at the Baltic freight index for shipping containers, you're sitting at about a cost of $2,127. Now, this is definitely higher than where we sat before the pandemic. You sat somewhere around $1,300 for a container back then. So we're definitely up from there. But if you just compare to 2021 and 2022 that we've had so far, we are way lower, way deflationary on shipping costs for containers, right? And we would expect that shipping costs not only for containers would then also translate over for other types of shipping costs, whether that's like rail or freight. We just saw FedEx posted bad numbers yesterday. This is the Bloomberg Commodity Index. I'm not seeing rapid deflation in the Bloomberg Commodity Index, so I'm less optimistic about the basket of the commodities index. However, I will say when I look at what some metals are doing, and you could look at lumber and see some massive deflation as well. But if I look at what some metals are doing year to date, aluminum, this is a big component for cars, down 15%. Copper, huge component for electric motors, down 14% year to date. Rolled steel, down 14%. Nickel, unfortunately, is up 36%, and lithium is up as well. However, these are smaller components of batteries. And with the lithium iron phosphate batteries that Tesla is typically using, we expect that lithium costs should have a nominal impact on the actual production of Tesla vehicles. It should be more than offset, I believe, by the cost of aluminum, for example, coming down, or copper coming down. Last time I did a calculation and I saw lithium bumped like 20%, I expected it would increase the cost of each battery for a Tesla vehicle to increase in cost somewhere between 40 to 80 bucks. It's a big deal when you add it together over 400,000 vehicles, right? Then it adds up. But if other costs are coming down, maybe that's okay. So this is a very interesting claim by Elon Musk that we could actually be seeing deflation already. I don't necessarily disagree with it. I see that in earnings calls as well. In fact, I talked to Lauren yesterday. Lauren was actually a big part of one of the people that I bounced ideas off of in January when I sold. And what I talked to Lauren about yesterday was I said, what I saw in January in earnings calls about how every single company was able to raise prices. Consumers were not batting an eye. Everybody said they had price elasticity. Everybody said they had pricing power. Everybody said they had trouble hiring. Everybody said there were shortages. That was January. Contrast to what we're seeing now, discounting to get rid of inventory, pausing hiring, trying to be more efficient with our marketing and our spend, having to do promotions to clear older dated inventory. Like, it is a completely different world today than what we saw in January. So in that sense, it kind of reiterates what Elon Musk is saying. In other words, what I'm seeing in earnings calls across the board reiterates what Elon Musk is saying. We're seeing metals deflation mostly reiterate what Elon Musk is saying. Obviously, there are plenty of other signs that tensions are such in the economy that the Federal Reserve might be getting a little bit ahead of itself. So Elon Musk could be right when he says, hey, you know what? We could be in a situation where we are already facing deflation. And then, of course, he throws in here a very smart investor I spoke to today says he's shorting the S&P 500. Here's the thing, though. You could have shorted pretty much anything in 2022. and nail it. Like, Fed goes into tightening, just go short. Anyway, all right. So moving on. Elon Musk did also give us an update on let me, I guess before I move on, just give a couple quick catalyst updates. We have January 25th for earnings. We have a release for Q4 vehicle deliveries and production on January 2nd. So mark your calendar, January 2nd for production and deliveries. China numbers, January 8th. Earnings, January 25th. Now, again, with Tesla Mexico purportedly getting announced, it seems like Tesla would not be announcing another Gigafactory in the event that demand were truly falling off of a cliff. However, it's possible that in the short term, demand truly is falling off a cliff, especially as people wait for the $7,500 tax credit. Now, Tesla is offering 10,000 miles of free supercharging and $3,750 if you buy a Tesla in December, which probably means if you took a lot of people are like, why would you take $3,750 in December if you could get $7,500 in January? I think people are forgetting that you don't get the $7,500 in January. You get the $7,500 when you file your taxes the next year. Okay, so you got to wait like another 14 or 15 months to see that $7,500, whereas you could get $3,750 off now. And I think that's why there's such a difference. If it were truly that immediate, I think Tesla would be like, all right, we'll just give you the $7,500 now, which in theory they could do. They could just do that if it were really that big of a demand problem. If Tesla was really about to have cars sitting on the lots all across America, rusting away, why not just offer the $7,500 credit in full or drop prices a little bit, right? Now, there is a counter argument that we talked about yesterday that companies do not want to chase the consumer to zero because ultimately that could erode brand value more than may have already been eroded for Tesla, and could erode margins and the potential to maintain margins ever in the future, right? So there is that potential. But I do think if the $7,500 issue were such a problem for Tesla, that all of a sudden sales went to zero in December because nobody's buying Teslas in December because, oh my gosh, I'm going to get another $3,750 in 14 months in the future, then I think Tesla would have woken up to that idea already. And we would have quite a long time ago already seen Tesla adjust. We haven't seen that yet, so we'll see. Now, the next thing that we need to cover is Twitter. Elon Musk suggested yesterday that there could be profitability at Twitter as soon as 2023. Now, I found that very interesting. He was on a Spaces call at like 11 o'clock yesterday. I'm like, dude, I'm going to get like 5 hours of sleep. How am I still listening to your Spaces call? Anyway, he did mention that profitability is expected in 2023. Cost cutting helped Twitter eliminate a $3 billion shortfall. Then why'd you have to raise $3.5 billion? Oh, that's right, because you're financing 2023. Dang it. Anyway, that's good news, right? Like, here's the thing. If you're a long-term holder of Tesla or potentially a bag holder of Tesla, something that you have to consider is when the Twitter noise goes away and the demand fears are allayed, which is the whole reason people got into Tesla in the first place, is that their demand is going to be explosive, which I believe. Then a lot of the impediments to the stock, I think, go away. Now, I need to give a shout out to Professor Jones from La Sorbonne, just outside of Paris, which Paris, of course, is, by the way, where I met my wife. I studied in Paris for 2 weeks myself at Cité d'Université, and I loved it. Loved that. Like, best time of my life, for sure. That was really awesome. But anyway, an engineering professor from just outside of Professor Jones from just outside of Paris had the following to say. Wrote me a letter. This morning I write to you as I must take issue with comments made in your video titled on selling Tesla stock. In your closing comments, you stated that when people lose faith, it's a sign of market irrationality. I still believe this, but we will continue with the professor's argument. I must take exception to that because your comments specifically exclude the full offense created by Elon Musk. As soon as Elon Musk announced that he had made an offer on Twitter, and with the intent of restoring freedom of speech to the platform, I instantly declared that if successful in his bid, it would ultimately turn into a full-scale cluster F of a burning S show. Elon made the decision to declare war on the, quote, woke culture. We all know that the results have ensued from day one since his arrival at Twitter. An increase on that platform in racist attacks on black people, an increase in misogyny, and an increase of anti-Semitism. Now, this, by the way, is not something that is cited in the email, but I believe this is a reference to a report from the New York Times, which did indicate in their opinion, well, it was actually the New York Times that did a piece on an anti-hate organization that suggested there were these increases. Elon Musk did rebut this and say that this information was false, that there's actually been a decrease. So it's kind of one of those things where it almost feels like, I hate to say, but like the old days of like Trump versus the mainstream media. The mainstream media says something and then Trump goes, fake news. Anyway, so the professor continues. The problem is that his war on the woke is a direct attack on the people who buy Tesla vehicles. They are the woke. I would say some of them, maybe, right? I want to interject that. I don't think necessarily all of them, but okay. Sure, probably more likely than the flip side, right? Who maybe are less inclined to buy EVs. Okay, I see the point. The people from whom Elon Musk sought gratification do not believe in clean energy. They do not believe in climate change or protocols to save the environment. These are the same people who continue to buy ICE vehicles. Elon's Shakespearean antic disposition of late has so disgusted the traditional Tesla buyer that he has forced their sentiment against him. Dude, can somebody please print that out? That is the most beautifully written quote I have ever heard in my life. This engineering professor, like, that should be a plaque in their lecture hall. I'm going to say that line again because that line was like incredible. Elon's Shakespearean antic disposition of late has so disgusted the traditional Tesla buyer that he must have forced their sentiment against him. That he has forced their sentiment against him. Yeah, same thing. Okay. Much in vain of Kanye West, it will be impossible for a large segment of his supporters to forgive him. This is a direct downward pull on Tesla stock, and I am not convinced that you have fully accepted how this really affects Tesla's valuation. You're absolutely right to argue the strengths of Tesla's fundamentals, but do you think there are enough, or they are enough, the fundamentals are enough to stave off the numbers of Tesla buyers who may now turn to other EV makers with public positions that are far less distasteful than those held by Elon Musk? Look, like it or not, like, hats off to the professor here. That was a well-written piece, okay? That was excellent. And he's not wrong. In the short term, you're probably going to piss off more liberals who are more inclined to buy EVs than Republicans, right? That's and conservatives. That's the way it is. Personally, and this is just my personal response, I think in the short term, yes, you're going to go through this hell. I think in the short term, this is very painful. And I think that, in 10 years from now, I think that liberals and conservatives alike are going to be like, I don't really care what Elon Musk is doing with robots or who builds these cars. These cars are freaking amazing. I think that this recession is going to set back other EV manufacturers. I think that GM and Ford are going to cut back. They can't figure out how to make a profitable electric vehicle. Ford sells a Mach-V that is not profitable. GM's Super Cruise only works on mapped highways. Mercedes, and they're a small amount of mapped highways. Mercedes-Benz's, fancy autopilot that they put in their $150,000 cars only works on like less than a few hundred miles of road in Germany because those are mapped roads. It's ridiculous. There is no competition for self-driving. There is very little electric vehicle competition. Yes, okay, BYD makes cheap-ass vehicles in China, and they can sell those like crazy. But remember, they're selling vehicles for like $8,000 to $14,000. They're selling little two-door putt-putt vehicles with 70-mile range. And honestly, Tesla might consider getting into that kind of market. I think that would be a great idea. I think it would be phenomenal if Tesla, especially when FSD, continues to develop and goes mainstream. I think it'd be phenomenal if Tesla had a small two-door with 80-mile range or even 100-mile range. You need a tiny battery then. You need a battery that's like 20% of the size of the battery we have now. And because you have a lighter battery, the car itself becomes more efficient. That's more than enough for the vast majority of the commute Americans face. The average commute in America is 30 minutes. It's simple. You don't need that much battery, especially if you plug it in every day. And if you could sell that sucker for $25,000 or $19,000, whew, game changer. Or you sell it for 15 and then charge 10K for the FSD, Anyway, so to me, look, unfazed by long-term fundamentals, right? I've obviously, taken a big hit on Tesla stock going down, but you also have to remember the Warren Buffettian reality that we face when it comes to stocks. Warren Buffett sees himself as a batter on a baseball field. And he's constantly being thrown pitches. And pitches are prices that he's being thrown of different stocks. And if he owns a certain stock, they might throw Tesla 100, Tesla 140, Tesla 200. And he might go, yeah, I ain't selling at any of these prices. This is stupid. Or like, if I need to sell a little bit because that's life, then you sell a little bit, but I'm hodling 90%. That's like my position, for example. Like, hey, got my tax bill. I'm set for next year. I got a huge acquisition. The biggest debt that I've ever signed in my life was just signed. I'll do a video on that soon. But otherwise, I'm like 90% in this thing. And so you stand on a pitcher's mound. Same thing for buying. It's like, do we want to buy Enphase at $500? Nah, that's okay. We'll wait. Do we want to buy Enphase at $300? Like 1%. Do we want to buy Enphase at $150? Yeah, 15%. So that mentality is really great. That you want to ignore all of the insanity of the pitches that you always get thrown. You have to remember, markets tend to be irrational to both sides. They go euphoric for too long. They go bearish for too long. So, I'm very excited about the future. But anyway, what are some comments here? Self-driving is nowhere close to completion. Thank you for being a member, by the way, of the channel. Reminder to check out the Programs on Building Your Wealth link down below. The Programs on Building Your Wealth and the YouTube channel are the only revenue sources we have. There are no external sponsors. So this video is only brought to you by me. Buy the dip, says another member over here. Tesla, $23. Yeah. Get ready for a big sell-off today, says someone here. Kevin, genuine question. How is the car repossession crisis impacting your thesis on Tesla? Yeah, this is actually a very good question. So generally, and this is my hypothesis, okay? I have not tested this thesis. This is my thesis. My thesis is that car repossessions first affect the poorest individuals in America. I believe the poorest individuals in America get screwed first, the bottom 20%. They get screwed first and they get helped last. That's capitalism, and it's terrible and it's wrong. And there are ways to fix that, I believe, through better financial education. That's why I ran for governor and almost got 1 million votes and encouraged financial education in every single damn high school in California. What has the current governor done? He sent stimulus checks to people making over $500,000. Didn't help homelessness. And now all of a sudden we're in a budget deficit because he's a dumbass. Sorry. I should be more professional. I'm a licensed financial advisor. I must respect the industry. I shouldn't be so blunt. And this video, of course, is not personalized financial advice for you. But I don't believe the bottom 20% of people are buying Teslas. In fact, statistically, the median income of a Tesla buyer is over $100,000. Statistically, a Tesla buyer is in the upper 20%, potentially the upper 40%. So I actually don't believe most of the car repossessions are going to hurt Tesla. They are going to hurt the other auto manufacturers. because repossessions mean less people can buy. They hurt the dealership model. Salespeople leave. Fewer cars sell at new car dealerships. It hurts the dealership model. It hurts legacy autos. Anyway, there you have it, folks. Thank you so much for being here. I love you. Love your support. Check out the programs I'm building your wealth. We'll see you in the next one. Bye.